Welcome to TalkTickers, your shortcut to understanding those crucial earnings calls.
Today we're diving into Enphase Energy's latest Q1 2025.
Yeah, let's jump right in and we'll break down the numbers, the strategy, and finish with our usual not financial advice trade idea.
Sounds good.
Okay, so the headlines. First quarter revenue was $356.1 million. They shipped about 1.53 million microinverters and 170.1 megawatt hours of batteries.
Decent numbers there.
And generated $33.8 million in free cash flow. Gross margin looked pretty strong at 49%, non-GAAP, of course, including those IRA benefits.
Right, and operating income, also non-GAAP with benefits, was 27% of revenue.
Inventory-wise, microinverters in the channel were a little bit high, apparently.
Just slightly elevated, yeah. But battery channel inventory was normal.
Okay, so that's the snapshot. Let's dig a bit deeper now.
Right, so that $356.1 million revenue figure, it actually included about $54 million from what they call safe harbor agreements.
Safe harbor. Remind us quickly what that means.
Yeah, basically it lets them book revenue from customers who've paid up front for future deliveries, often locking in, tax benefits before they expire.
Ah, got it. So it pulls some future revenue forward, in a sense.
Kind of, yeah. And about that 49% gross margin, still pretty good, but it was actually down from the quarter before.
Okay, why was that? Costs going up?
Not primarily costs, no. It was more about booking fewer production tax credits this time around those government incentives,
Wait, the IRA stuff?
Exactly. And also just the mix of products they sold during the quarter affected the margin.
Okay, so less about manufacturing costs, more about the sales blend and tax credit timing. Makes sense. You also mentioned operating expenses were down.
They were, yeah. That was mainly due to the restructuring actions they took late last year.
Trimming the sales a bit.
Pretty much. Streamlining things, aiming for, a leaner operation going forward.
And what about capital? Were they buying back shares?
They were active there, spent about $100 million buying back their own stock in Q1, part of their ongoing program.
Always seen as a sign of confidence, or at least that management thinks the stock's cheap.
Generally, yes. Returns capital to shareholders.
Yeah.
Now, looking ahead to Q2, they're projecting revenue between $340 million and $380 million.
Okay, a similar sort of range. Does that include safe harbor too?
It does. About $40 million baked into that Q2 forecast from Safe Harbor.
In batteries, what's the shipment expectation there?
They're guiding for 160 to 180 megawatt hours in Q2.
Okay. But there's a cloud on the horizon, right? Tariffs.
Yes. The tariff impact. They expect it to hit gross margin by about 2% negatively in Q2.
Only 2%. I thought it was going to be worse.
Well, that's just for Q2. The expectation is that it ramps up significantly in Q3.
Ramps up how much?
They're forecasting a 6% to 8% negative hit on gross margins starting in Q3. It's mainly linked to tariffs on batteries coming from China.
Ouch. That's a pretty big bite out of margins. What are they doing about it?
They're not just sitting back. They're actively working on diversifying the supply chain, finding alternative sources outside China.
Trying to move production or sourcing elsewhere.
Exactly. The goal, they said, is to completely offset that tariff impact, but it'll take time. They're aiming for Q2 2026 to be fully clear of it.
So a year or so of margin pressure from this, potentially? Okay, let's talk regions. U.S. revenue dipped.
Yeah, U.S. was down 13% compared to Q4. They put that down to a few things. Normal seasonality, some, general softening in demand.
And didn't they mention something about a leasing company?
They did, yeah. Financial troubles at a major national lease provider apparently hurt sales too.
But California was a bright spot.
California is looking encouraging, especially with strong battery attachment rates for systems under the new NEM 3.0 rules. People are pairing solar with storage there.
Makes sense with the new net metering rules.
Yeah.
What about Europe? That was up, right?
Europe saw a 7% revenue increase, yeah. Driven largely by shipments of their flex-phase battery, especially into Germany.
Even though overall solar buying slowed down a bit there.
Yeah, the end market sell-through was slightly down overall in Europe, but the Enphase revenue grew thanks to those battery shipments.
Interesting. Any specific country trends in Europe?
Well, the Netherlands softened slightly, but the trend there is definitely shifting towards solar plus battery systems from the get-go.
Smart.
France slowed down because utility rate cuts made solar less attractive financially for a bit. But they expect a VAT reduction later this year to maybe spark a rebound.
Okay.
Germany's showing really strong demand for battery backup energy independence, seems key there. And the UK market just continues to be solid.
And they're planning to push into more European countries too.
That's the plan, yes. Expand their footprint beyond the current core markets.
It wasn't just the big markets either. Puerto Rico, India, Brazil.
Right, some interesting spots. Puerto Rico has strong demand for batteries meeting specific domestic content rules.
Probably tied to local incentives or rebuilding efforts.
Could be. India continues to grow for their IQ8 microinverters and batteries. And Brazil, they expect growth there, thanks to new fire safety recommendations favoring their tech.
Lots of moving parts globally. Let's talk products. They obviously aren't standing still there. What's new?
Definitely focused on innovation. Big one is the 4th gen IQ battery, the 10C model, launching now in Q2.
What's better about it?
Simpler backup setup, smaller size, easier installation, ticks a lot of boxes for installers and homeowners.
Okay. And something for apartments.
Yeah, the IQ balcony solar product. Launching in Germany and Belgium soon, targeting that, previously untapped apartment dweller market.
Interesting niche. What else?
For the small commercial market, they've got new IQ9 microinverters coming. These use gallium nitride tech GaN.
Oh, GaN. That's supposed to be more efficient, right?
Exactly. Higher efficiency, more power dense. Production for those should start Q4 this year.
And they're even stepping outside the usual solar and storage box.
They are. They've just started shipping the IQ Power Pack 1500 in the US and Canada. It's a portable power station.
Like a Yeti competitor, sort of?
Sort of entering that consumer energy space, yeah. Tapping into demand for portable and backup power. Plus, their next-gen IQ EV charger is rolling out in Europe now, expanding elsewhere later, trying to own more of the home energy ecosystem.
Right, connecting all the pieces.
And they keep improving their solar graph platform for installers, too.
So, summing up the management vibe, sounds like they know it's a tricky environment, but they're focused on innovation and managing the challenges, like tariffs.
That's definitely the message. Focus on product, reliability, customer service to navigate, tariffs, interest rates, subsidies. It's all a bit fluid.
And that supply chain realignment is key for the tariff issue.
Absolutely. Finding non-China sources, especially for batteries, without having to do major redesigns. They want to stick with their LFP chemistry.
And the bigger picture, they still see strong long-term drivers.
Very much so. Rising utility rates make solar plus storage more attractive, plus the potential for homeowners to make money through VPPs, virtual power plants.
Selling power back to the grid or participating in grid services.
Exactly. Improves the ROI. And longer term, they see grid instability and just the sheer rise in electricity demand, maybe from AI data centers and things, as major tailwinds.
Okay, so bringing it back to an investor perspective, what are the key things to watch after this call?
Well, clearly the company's facing headwinds, especially in the U.S. residential market right now. No denying that.
But they have strategies in place.
Right. The management seems proactive, new products, tackling the tariff issue, pushing into new markets. Those are the potential upsides.
The tariff impact on battery margins is definitely something to track closely, though.
For sure. The next few quarters will show how bad it gets and how quickly they can mitigate it with the supply chain shifts. Success there is pretty crucial.
And those new products, the Gen 4 battery, the balcony solar, the commercial stuff, those could really move the needle if they gain traction.
Absolutely. Those are the growth levers. And their focus on software and grid integration, it suggests they're moving towards being a broader energy management company, not just hardware.
Adds value, makes the system stickier for homeowners?
Potentially, yes. So investors really need to watch demand trends in the second half of the year, see how IRA clarity plays out, what interest rates do.
Lots to keep an eye on. Okay, let's shift gears. Time for our This Is Not Financial Advices segment. Outrageous but plausible trade ideas based on the call. You go first.
Okay. Thinking about that strong push into Europe, especially Germany, with the flex phase battery and backup demand, plus the new balcony solar.
Yeah.
What if you looked at companies involved in installing these systems in Europe, maybe specialized logistics providers or even component suppliers within Europe that might benefit from Enphase's growth there?
So not Enphase itself, but the ecosystem around it in Europe.
Exactly. If Enphase hits their targets there, these ancillary businesses could see a nice bump in volume. It's predicated on Enphase succeeding, of course.
Plausible, if a bit indirect. Okay, my turn. Thinking about that IQ Power Pack 1500, their entry into portable power.
Right. The consumer play.
What if you look at companies making high-quality portable solar panels, the kind you'd use to recharge those power stations when you're off-grid?
Ah, the complementary product.
Yeah. If the market for portable power stations grows, maybe partly thanks to Enphase entering, then the demand for ways to recharge them on the go, like portable panels, might grow synergistically.
Speculative definitely depends on that whole portable power market taking off more broadly.
Totally speculative. Outrageous. Maybe plausible. Okay, that about wraps up our deep dive into the Enphase Energy Q1 call.
We've hit the financials, the strategy, the market dynamics.
And toss out a couple of highly speculative trade ideas. Remember, everyone, this is just for info and discussion, definitely not financial advice.
Always do your own research.
We'd love to hear what stood out to you from the call or any questions you still have. Let us know.
Yeah, join the conversation.
Thanks for tuning in to TalkTickers. Until the next earnings breakdown, keep digging deeper.